Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst at Alpari Research and Analysis, and this is Trading Sniper. This is daily analytical report. I'm sorry, Trading Sniper was recorded 1 hour ago. Now it's time for daily analytical report. Let's start with the calendar. As you can see, we already received important data from UK. Most of that data was worse than expectations. Well, inflation was worse than expectations, below the expectations, but retail price index was better. So a mixed data. Let's say it's a mixed data, but obviously pound is more influenced now by the Brexit, because recently we had some new developments about this. But yeah, this is the calendar today. We are still waiting for the retail sales data from Canada, which will be definitely important, and we'll have FOMC minutes published in 9 hours. I think with that being said, we can take a look on the calendar and on the chart. So we start with Bitcoin where the volatility is back, especially last week. As you can see, we started with a nice upswing, then we ended the last week with a nice drop. Currently the price is close to the yearly highs, so we have bigger chances for a further upswing, and the sentiment on the Bitcoin currently is positive. The next one is American dollar to Swiss franc. What is happening here is the price respected the horizontal resistance at the very beginning of the week. The price respected this resistance yesterday and today as well. So you can see that this is the most important level this week. The thing is, on American dollar to Swiss franc is as long as we stay below those two, the sentiment is negative. Why is that? Because this is an ultimate resistance at the moment. It was a resistance here, then it was a support, and broken support becomes a resistance. So as long as we are below the green line, the sentiment on American dollar to Swiss franc is negative. Now gold, situation on gold is very interesting. As you can see, we were on a long-term uptrend line here, and the price most recently created two hammers. Two hammers on such an important support. So a long-term uptrend line together with the 38.2 Fibonacci. That's supposed to be a buy signal. After two hammers here, the price normally should climb higher. But as you can see here, the situation is different and the price did not climb higher. Instead of this, the price dropped. And this downswing from the fundamental point of view is driven by the stronger dollar, and from the technical point of view, this drop is driven by this false breakout above the upper line of the wedge. So there was a buy signal here, it got cancelled, it got denied, and now the price is going lower. From the price action point of view, guys, if the price creates two hammers on such an important support and then fails to climb higher, it means that demand is very weak and most probably we will see a further drop. That if buyers are not using this to pull the price higher, it means that they don't have enough power and most probably the price will decline. Here is, you can see the strength of the dollar. This is euro dollar, which last week broke horizontal support. Well, first of all, they bounced from the horizontal resistance, then they broke horizontal support and a dynamic support here. After the breakout, the yellow line became a resistance, and yesterday we tested this line and test was positive for sellers because the price created a long head on the candle. So this is a great sell signal. Price being below the yellow area gives us a nice selling opportunity. Now crude oil. Crude oil is in a very interesting place. Also here we have a drop, because mostly by this stronger dollar, but also last week the price defended the long-term uptrend line here, right? That was positive, but we are still inside of a flag formation. So this is upper line of the flag and this is lower line of the flag. Flag here is bearish. Why? Because it was created after this drop. So we had a drop at the end of April and the price creates a flag, and this drop promotes a further slide. So this drop promotes the price to climb higher, but you don't assume this now. What you should do is you should wait for the breakout. So breakout of the lower line of this the flag, so this black line will be an invitation to go short, and the breakout of the upper line of this flag will be an invitation to go long. Now New Zealand dollar to Canadian dollar, where we are still going lower, and I absolutely love this setup because I anticipated this somewhere here, and I'm telling you about this almost every day on our daily reports, almost 400 pips higher. And this shows you the power of the false breakout. So look at this. This is the false breakout above the horizontal resistance and above the dynamic resistance here. Price creates also double top formation and breaks the neckline of the double top formation. And all this, and this also on a weekly chart, this is bearish engulfing. Many bearish factors together at one place, and this promotes a further downswing. Now dollar index also shows you the power of dollar. Here this movement is very technical, so an upswing flag, upswing wedge, upswing. What I absolutely like here is the fact that this is also an ascending triangle pattern, and I talk about the ascending triangles since somewhere here. And I told you that this promotes a further upswing, and this is happening. We are breaking the upper line of this triangle again. Again, the price is pushing higher. Price closing today above the orange line will be an invitation to go long, will be a proper buy signal for the dollar index. American dollar to Canadian dollar, here I do have a long position here, open here, it was going great, but then a false breakout. I always tell you that the false breakout bring movements in the opposite direction, and most probably I will have an example here. So why I didn't close my position? Well, I had my stop loss order and I keep this position open just to keep it alive and not to mess with the stop loss order, because sometimes you can mess with the stop loss order when the price is opened and it's against your initial strategy, and you can be influenced by your emotions, and you would like to limit this. You don't want to be influenced by your emotions. And this is why I keep this open. If I will get a loss, this will not be a big loss, so nothing will happen. British pound to Japanese yen. Yesterday I said that there should be some kind of a correction because the price is going very high without any very low without any correction, and this correction happened almost straight away after our webinar, and then a drop. And fair enough. For me, this is enough for a correction. The price retrace. Let's see how many. Almost 30% of this drop, which is fair enough, which is enough. And now the price is going lower, so there is a major sell signal on the British pound to Japanese yen, definitely. Now S&P 500, we are still in a wedge formation. This black line is a wedge. Wedge is a trend continuation pattern, so we should see a further upswing. But the problem with this wedge is that we already broke the long-term uptrend line, so price being below this uptrend line is definitely a negative situation for the S&P 500. American dollar to Russian ruble, here the situation is rather negative because we are below the orange resistance. Long story short, as long as we stay below the orange resistance, the situation is rather negative. Now euro to Russian ruble, where also we do have a negative situation anticipated by us. Downswing flag, downswing. Breakout of the orange support will be a super strong sell signal. Swiss franc to Japanese yen, downswing flag, and most probably after this we should see the downswing, but we will see what will happen here. Australian dollar to Japanese yen, no trading situation here. I just keep this position open. I thought that the price would decline after this downtrend line, but we are in a pennant. Price coming back above the yellow area, buy signal, price breaking the lower green line, sell signal. Euro to Canadian dollar, false breakout above the horizontal resistance brings us a sell signal, so classic false breakout situation here. And watch on this, the price is approaching long-term dynamic support. Price closing today below this green line will be an invitation to go short. Euro to Japanese yen, price bounce from the yellow area, and from this we are ready to go short. And euro to Swiss franc, here I have a short option here. My stop loss is here. Oh, it was almost touched yesterday, today, but the price keeps going lower. I think the stop loss is in a good place. We'll see what will happen with this trade. So guys, thanks very much for watching the daily analytical report. I hope you enjoyed this. Tomorrow we'll try to look for different trading occasions on other instruments. Thanks very much. Good luck in trading.